Hi everybody. So we're going to go through how do we do the market overview. And let me kind of start with some context of what they're looking for. So angel investors are used to working with venture capital, and if the company is successful, you're very likely going to have to raise money from venture capital. So that's what starts this process up and why they're asking for what they're asking for. Essentially, VCs want to invest in a company that they can ultimately exit for around $1 billion. That's what they'd like to see, or at least have that potential. They're also wanting to invest in companies that are a market leader. So to get yourself to $1 billion, really that exit's going to happen over a 10 to 12 year period of time. So what they're going to want to see you doing is getting into revenues of $150 to $250 million in kind of year six or seven, something to that effect. So they're just wanting to make sure that if everything goes well, if we really hit it, we have a market that could potentially support somebody like that. So the size of it, $1 billion, that's kind of the number because their funds are so large. And they like to invest in market leaders because there's such an advantage to being a market leader. So that's what they're trying to do. Because angels work with VCs and know ultimately that may be a source of capital here, they're wanting to make sure that you fit into that criterion before they invest. So the first thing you do is you could create what's called the TAM, the total addressable market. The total addressable market you want to calculate two ways, top down and bottom up. And the main reason for that is no matter what you ask for, your investor is very likely to ask for the other thing. So if you do both, one, it makes you look like you know what you're doing, and two, it takes that objection away. So a top-down analysis is usually from a market research company. The market research companies are Gartner, Forrester, Atherton, IBIS World. That's the big one for VCs. So what they're wanting to see is what's the size of the market, what's it growing at, what are its significant trends, and what's its significant segments. So the first thing you want to do is you want to try to get a market research report from IBIS. The reason is almost all VCs use IBIS. They've done a special offering for the VCs, so almost everybody converted over to them. And you can get the front page of an IBIS report for free. So if you just go to the website, find a segment that tracks to yours, you can get that front page for free. So at least we can get this first set of numbers for free. IBIS tracks many different segments, but rarely will it be the segment right on top of you. Let's say you're a business social network. They're very likely not to be tracking business social networks, but they will be tracking social networking itself. And so like in our situation, this is a company we work with called iAmVirtual. This is an iPhone, iPad application for executive assistants. They don't track the virtual assistant market itself, but they do track the staffing market. So they've essentially forecasted the staffing market at $168 billion, growing at 12% per year. So that's plenty market to support what we're talking about, and we'll get into that in just a second. So that's what you're trying to do. You're trying to get this market person, research person, marketing expert to say this is how big the industry is. And because it's usually a market above the market you're in, it'll typically be a very large number. So again, to summarize, 4 numbers you want to get from this research report are the size of the market, the growth of the market, the segments of the market, and the trends of the market. So that's the top-down, and you only have to do the TAM from a top-down basis. The bottom-up analysis is now we're going to actually start counting people and building this market. So if you look at the total addressable market is the size of the market if everybody in the market purchased for a market reasonable price. Now most of the time your companies will be having a premium product. One, you're going to have a premium because it's early in the market, so that pricing is typically premium. In addition to that, as competition comes in, it's going to drive it down, and we're going to have low-cost vendors. We're going to have high-value vendors. So what you're trying to do is come to a market reasonable price that would go across all of that, which would be kind of like right in the middle of the bell curve. So in our specific situation, the way we came to our total addressable market, we're in the market for executive assistants. So we went to the Census Bureau and we found that market. The Census Bureau says there's 4,010,200 executive assistants in the United States, and that the average executive assistant makes $34,700 per year. So the total addressable market would just be those two numbers multiplied together, or $139 billion. That's the total addressable market, bottom up. And it fits nicely and reasonably in that that's the size of the market from as it that's under the size of the market from IBISWorld. Then your service addressable market, that's usually a smaller market. This is the market that of all the people where the TAM is if everybody did buy. In markets everybody doesn't buy. There's a significant segment of the market where people didn't buy. But of the market of people that did buy, how many bought from you and your competitors? So that's the service addressable market. So again, in iAmVirtual, what we looked at is said, we need to be pretty tight on our segmenting here because we have such a big market. So what we said was, let's go after the temporary staffing. And the IBIS says that the temporary staffing is 2.2% of the market, or actually that was a BMO Capital Markets said that. They were the source of that. So 2.2% of the market. So if you take $139 billion and you multiply it by 2.2%, that makes the service addressable market to be $3 billion, which that's just about right where we want it to be. Now the next number is called the service obtainable market. This is the market you expect to obtain in year 6 or 7. That's kind of what you're focusing on after. Now there's two different types of market that are out there. There is a highly fragmented market, and then there's a niche market. In a niche market, you'll typically have the top player have somewhere between 30 and 50% of the market. And so these are, narrow markets where you have a main market leader. In a fragmented market, you'll have a lot of players, and the market leader will probably have somewhere between 5 and 10% of the market. Well, our market is very fragmented, so what we expect to do is have 5% of that market, and that'll show that it's a fragmented market. So if you take $3 billion, the size of the service obtainable market, and you multiply by 5%, the service obtainable market is $153 million, which is right where we want it to be. That's about the number we want. To get to $1 billion exit, and if we're in year 5 or 6, that means by year 10 we should be in a place where we're doing $250 million in revenue, and that in this kind of market, a typical multiple is 4 to 5 times revenue. So 4 times 250 million, $1 billion, we got our number. And so what you're trying to show is a thoughtful process, understanding the dynamics of a market, and understand how TAM, SAM, and SOM fit together, and how you can build this up to make a market size that's reasonable for venture people and thus angel investors to invest in. So this is kind of the first step of the market analysis. The second step of the market analysis is to do a competitive analysis. So again, we're going to start looking at how we compare to the other people in the market. And this diagram that you're seeing here is called a Gartner quadrant. And essentially it's a 2x2 matrix with the ability to execute going up the x-axis and the competitiveness of vision going across the y-axis. And so the people in this box here are your niche players. They're the people who are playing very specific niches. The challengers are over here. They're not quite over to the leader yet because they just don't have enough vision. And then the visionaries over here, and we don't have anybody in the visionary space here. So this would be people with high vision, but they just don't have the ability to execute. In our case, iAmVirtual, we've got very good financing. We're first to market, and we're really making major penetration. So we've put ourselves in this ability to execute, strong ability to execute, and great vision of what we're doing. The other one is called ZipTast. It's just barely coming inside of there. So essentially what you're going to do is you're going to take probably the top 5 to 10 competitors, and you're going to place them in here and understand why you're placing one in each one. Now, if you look at this and you say, well, I'm never going to get myself into this upper right corner, you can change these axes to show your advantage better. But people are very used to these axes, and they're very used to these titles of challenger, leader, visionary, and niche players. So if you can get it yourself using this specific matrix, it's best. And then the last analysis you're going to do is a competitive matrix. And you're really going to do 3 of these. You're going to do one for your executive summary with 5 to 6 major feature categories on here. Then you're going to do one for your business strategy document with probably 20 different feature areas in it. They're a little bit more detail, and then in your product roadmap, you're probably going to have 50 to 60 different features, each one with these things. These are called Harvey balls. So in a Harvey ball, a full pie says this company has done a really good job on this specific feature. If they've done kind of a halfway job, it's a halfway one. There's a 3/4 pie, there's a quarter pie, and then there's an empty pie. So this allows you to look at each feature set and how does this specific competitor fit into this category. So it gives you a little bit better than just check marks. So these are the three different types of analysis you're going to do for the market size of it. And what you're trying to do is just, again, show a thoughtful process that you've really dealt in, and it shows your sophistication as a business person, understanding how to use these tools, the way your thought process goes together in developing these assumptions, and your ability to say, I understand what investors are looking for. Good luck on this, and we'll talk with you in our next session.